Guys, it's 2023. Man, I genuinely hope the markets do better this year. Hope is a strategy, right?
You should never hope. Hope is like a curse word in investing.
It is. It is the big four-letter word. Let, let's kick this year off right, though. In this show, guys, welcome back. I'm in kind of a weird hotel situation right now, but we wanted to do an episode for you guys to kick off the new year. So we're going to talk about some predictions. We're going to answer a bunch of questions that you guys sent in. We're going to talk about kind of a recap from 2022 and what we think is going to be big this year. Yeah. Trav, what's going on in your world, man? I know you've been doing some deep research. You've been tweeting a lot. You're pumping out the content. What's going on?
Yeah, man. I'm as hyped as ever. I'm excited for 2023. We know it'll be different than 2022. We don't exactly know how yet, but I think it'll be good. I think it's going to be full of surprises. And I was going through like a lot of the Wall Street strategists predictions for 2023, and they were kind of a snooze fest, kind of boring. So I've been trying to think about how 2023 might evolve in ways that are super surprising. So we should talk about that at some point. But yeah, I'm dialed in. I'm back, every day doing content, doing podcasts. So it's fun. Like I'm ready for this year to be just an absolutely massive year on the stock side.
Awesome. Nikki, are you optimistic or pessimistic for 2023?
I'm optimistic, which is like the contrarian view right now. Everybody, and Trav, I was reading through some analyst predictions as well, and it's all doom and gloom out there. Everywhere I turn, everything's doom and gloom. So right now, the contrarian bet is that we may just be okay. Maybe the economy just kind of chugs along. And I feel like a broken record because I've been kind of saying this viewpoint for a while now, that we just kind of maybe chop around what things lukewarm. We're not hot, we're not cold, we're lukewarm. But I'm very optimistic about 2023 and beyond. I think that 2022 was this like transitional year, coming out of the pandemic and coming out of a lot of the things we saw, with the Fed and with fiscal policies and stimulus and stuff. So we had a big party, and 2022 was like a huge ass hangover that we were all dealing with. That's kind of how I look at it. And a lot of things are really, including the real estate market and etc., it's all kind of coming back to baseline, right? We're recovering from our hangover. We had some ramen in 2022, some chicken soup and some electrolytes, and now we're like, okay, now what, right? Like, let's get back to our normal baseline. So that's kind of how I've viewed it, and I think that in the stock market in particular, there's a lot of opportunity out there, and I do think that we are going into what could be a stock pickers market, which is maybe something to talk about later. But yeah, I'm optimistic for 2023, and I think that everybody needs to be paying attention. Don't be discouraged by 2022. It's a new year, and there's going to be opportunity to be had for sure.
Yeah, whenever we look at the charts, it's kind of surprising that people were so, I guess, surprised at the fact that we had a pullback. If you look at the NASDAQ from 2019, 2020, and 2021, we just had three massive breakout years. And so it's not surprising to see a pullback after such an explosive move, right? Same thing with Bitcoin. And if we look at a log chart of Bitcoin, you can see from its inception, basically you get 2 or 3 green years and you get a red year and then a few green years and a red year. And granted, there's no guarantee that this is going to continue like this, but until this narrative changes, it's intact and it's valid, right? And so a lot of people, during the bull market in crypto, the narrative is, oh, up only, this time is different, blah, blah, blah. We've heard this every market cycle since 2013. But looking at the price action right now, Bitcoin is at a very, very crucial level. It's at what was previously resistance for 2017, 2018, 2019, and now pulled back to support. So I think the first quarter is going to be really, really important for Bitcoin. I'm pessimistic on quote unquote crypto going into the first, I would say, several quarters of this year. We're still dealing with the fallout of FTX and just implosions. As of today, Silvergate is plunging. We're still seeing contagion and fallout, and I think there's still a lot of stuff that needs to die and be purged from this space. But that's why I say Bitcoin is in a class of its own. And I too have been reading a lot of predictions and forecasts from some of the large companies in the crypto space. And everybody is kind of in agreement that crypto is screwed, at least the current narrative. But Bitcoin is kind of the quote unquote flight to safety in a way. But the fact remains that Bitcoin has been closely following the NASDAQ, right? And if we look at this downward trending price action here in the NQ, if we look at a daily chart on Bitcoin, you can see there's just been a lot of correlation there. So I think even though we are at a really key level of support in Bitcoin, I think a lot really depends on what stocks do here over the next month or two. What do you guys think of that?
Yeah, I think that's a great analysis. I think, the consensus right now seems to be so much in unison, at least from the Wall Street side. I was reading through, like I said, all the big banks, big macro forecast over the weekend, and a lot of them are saying, the Fed will start to slow rates, inflation's going to slow, markets will still be weak because we're going into recession, but that's like what everybody expects. And it seems like there's really massive room for something to surprise this year. Last year, the theme pretty much played out throughout the year. We did have some bounces. We had some fake outs as far as like the Fed starting to, change their tone or whatever. And people thought the Fed pivot was near. But pretty much the trend, if you had just rode the broader theme throughout the year, you would have done just fine, right? Short NASDAQ, short bonds, stay out of anything high beta, high risk. Basically you could have been short crypto, or at least a lot of crypto, and done very well, or been out of crypto entirely and done fine. And I think it's going to be harder this year. I think, there's these consensus themes spilling over from last year. And I just think by at least the middle of 2023, the world will look different in ways that people aren't predicting yet. And we called the turn on the whole inflation thing early, like in early 2021, even late 2020, where we said, we think this could be setting up for an inflation surprise that the markets aren't really ready for. Now, I think the turn, it may not be as dramatic, but I think the turn will be something where there could actually be a bullish setup here as we move into the middle parts of the year, obviously in a couple of months, where China's reopening. You could have a recovery in Europe with the energy situation. It's been a warm winter so far, so that really alleviates one of the big concerns there. Everyone thinks Europe's going to be in recession. I don't know. It's not totally clear. China's going to add to global growth. The U.S. job market's still holding up. So, if those things play out, you could actually have a scenario where global GDP surprises to the upside, which is going to shock a lot of people. And so, yeah, I just don't buy the consensus right now. I'm not saying that it's all wrong, but I do think we should be looking for ways, once again, to sort of fade consensus in some areas. That could also mean, by the way, for crypto, that, it comes out of this really bearish period at some point and actually stages a comeback. Perhaps we'll see. But
yeah, let's talk about that. Let's talk about some things that we think we're bullish on or bearish on this year. Whenever I said I was bearish on crypto as a whole, what I mean by that is like the current narrative, right? Like the thing that drove price in 2020 and 2021 was NFTs and DeFi. And it turned out that a lot of quote unquote DeFi was absolute bullshit. It was not decentralized finance. It was actually CeFi. It was centralized with a DeFi marketing angle, right? And so I think that with the FTX implosion, what that does is it drives people to A, Bitcoin, and B, to truly decentralized things that remove counterparty risk. So am I bearish on crypto as a whole going forward? No. Am I bearish on the infinite yield, Ponzi-nomics of some of the stuff that we saw? Yes. And my question and what I'm really looking for this year and into next year before the halving is, what is the next narrative, right? And this is a question I've been getting a lot of, is like, okay, what drives the next market cycle? Because every market cycle, there's a narrative. And if you're paying attention in the crypto space, you'll know what that narrative is early enough to get in positions that turn out to be massive winners, right? So that's why even when markets are boring, I think it makes sense to stay dialed in, to understand what's happening and not get lazy or disconnected from the market. Um, so yeah, I'm kind of going back into focus mode and research mode this year. There's a time for planting seeds and researching and making early bets, and then there's a time for harvesting, which is what we saw in 2021, right? So, yeah.
Chris, you make a good point. One thing that I've actually been concerned about is a lot of investors that came in as of 2020 and beyond were new. They were newer, right? Or maybe they weren't new, but they've never experienced a bear market before. And I guess my concern is that 2022 has scared a lot of people away, or they're feeling discouraged. But, I encourage everybody to realize where we came from and what the market has done. Like you pointed out that chart of Bitcoin, the run it's had since 2020, and how it's holding that support. And the stocks are in the same boat, right? We saw stocks move. I think the S&P moved 100% as of the pandemic crash. So, these are big moves that we saw in assets, risk assets, and we are of course going to see these things. The party always slows down or stops eventually, right? You can't party all the time forever. And I just don't want people to feel discouraged that 2022 probably wrecked a lot of people. But that doesn't mean that going forward, you can't continue to create a portfolio that's going to work for you. Think of management now and be a little more dialed in than maybe before. It's almost pushing people to have to really focus on those things, which I think is a good thing. But I hope a lot of people didn't get scared away in 2022.
Yeah, I mean
Yeah,
that's what happens every market cycle, right, Trav? Like people yeet into the highs and then they disappear at the lows, which is the exact opposite of what they should be doing.
totally. Yeah, that's again exactly why, I'm kind of trying to think about what would be bullish in the next part of the cycle, because, we forget that a lot of the frothy stuff peaked in early spring of 2021. So it's going to be almost 2 years since that happened, as of spring of 2023. So as we get deeper into this bear cycle, we actually probably want to start looking for reasons to get a little bit more bullish. I know that sounds crazy because everyone's bared up and everyone wants to be defensive. And that's exactly when we actually need to be looking for the green shoots and thinking about what are the signals that would lead us to get more bullish and more constructive. And like Nikki said, also, you can still, as we've done, build parts of the portfolio even through the bear cycle. So that's what we're trying to do. And I'm not like going YOLO long yet, but again, I'm just trying to think about what could surprise on the upside from a bullish perspective. What could create, even if it's just a 6 month or 8 month, 40% rip among a lot of these beaten up stocks. And what would create the environment for that? Because if you go back to like the 73, 74 period, which I had talked about, a year, 2 years ago, as potentially being similar to what we could see now with that, massive spike in inflation, markets down 40%. Well, what was it? Late 74, early 75, I think. I'm going to have to look up the SPX to get my dates exactly right here. But if you go back there, 70, I think it was late 74, 75, the market ripped like 50%. And so you can make a tremendous amount of returns there, especially in certain areas of the market, if you can catch a wave like that. So yeah, I just encourage everybody to not be forever bared up and think about ways that you might get optimistic and what signs you would look for to make you, more optimistic. So yeah, it would have been late 74 when that market bottomed and it ripped, basically, like 50 to 60% through the next year and a half, 2 years. So
This is why I think preparing for both sides right now is important. Trav, you've done a really good job at this. You've had your hedges on. to protect the downside, but you've also been nibbling and buying certain stocks that are showing value and kind of building into that at the same time on the long side. And I think that that is the right strategy right now. 100% short or 100% long is not the right strategy, and you can do a mix of these different things if you want to hold some cash in the portfolio in case of more downside while still nibbling on stocks and Bitcoin or whatever it is you're trying to buy. I just think that that's an important point to make, and Trav, you've done a good job um, at working both sides in the market during this very uncertain time that I think a lot of people are maybe their opinions are just very strong on one side, and when that happens, that's when I usually step back and say, okay, like you said, how can you think about the green shoots and think about what could happen to really flip everything on its head? And that's what the market likes to do, right? When everyone's thinking the same, you usually want to get suspicious.
Yep, yep. So let's talk about that then. So I guess the bull case would be, all right, if stocks rebound, Bitcoin would likely hold, let's call it 15K support. It could go as low as like 10 to 15K, somewhere in that range, right? But basically using that prior year's resistance as support. And then stocks would rebound and you guys would have some good dip buys there. Let's talk about what that scenario looks like. And then also what happens if that doesn't play out. If we do start to get, say, a new low here on the NASDAQ, and then Bitcoin starts to close below 10K, what does that look like? And what could be the counter trend plays? One thing I was looking at was actually gold's chart, how it's still holding up and there's like a massive cup and handle. So I was thinking like, okay, if the bear case plays out in stocks and Bitcoin, does gold hold up or does gold go with it? Because the chart is actually looking really, really bullish right now. And I've had a target of 2,500 from back in from 2015. So I've got a physical gold position that's only about 5% of the portfolio, but this is something that I've wanted some exposure to. And I was just wondering you guys' opinion, like if equities and Bitcoin goes down, does gold do well or does it also fall with everything else?
Trav, is gold holding up because of the potential for the Fed to reduce rates and then basically inflation staying high? So, the real rate continuing to be negative? Is that what's happening with gold right now?
It's interesting because gold kind of broke away from its, almost one-to-one correlation with real interest rates. As real interest rates have actually gone into positive territory again, you would expect gold to be very, very weak. It's actually held up reasonably well in the last 3 to 6 months, despite the fact that real interest rates have actually gone positive. So again, typically you would see gold be very negatively correlated to real interest rates. But with real interest rates going up and gold kind of just chugging along, it's been a little bit of a break in the typical relationship. And so the question is why and what does that mean? Some people believe it's because of geopolitical issues happening with Russia, Ukraine, as well as, perhaps some stuff in China, perhaps some countries looking to diversify some of their foreign exchange reserves. We don't fully know the complete reason for it, but it's something to take note of. And I do think, we've seen on days where the dollar weakens that gold and silver are really primed for upside. They are actually making very large upward moves on days when we see the dollar pull back in a significant way. So I think gold and silver look pretty coiled to make a move if the dollar weakens. I've seen differing opinions from the Wall Street strategists on whether or not they think the dollar will actually weaken this year. Some still think the dollar will remain strong. The obvious way that it would weaken is if the Fed pauses or stops or even starts to cut rates at some point and other central banks are still catching up and raising rates. So if Europe is still, trying to raise rates, which the ECB is still acting very hawkish, if they're still on the path of raising rates as the Fed pauses in, say, January or February, then you could see the dollar weaken and you could see gold and silver really start to shine. But, I think a large part of what gold will do this year, at least in this calendar year, will very much depend on what the dollar does. That seems to be what's driving it more than real interest rates currently.
Okay.
Interesting. Yeah, the dollar's been extremely volatile. And I know we got some questions on that, but just to give a little context to anybody, so looking at the DXY or the DX1 on TradingView, This is the dollar index future, which basically compares the dollar to a basket of other forex pairs like the euro and pound and stuff. And you can see historically, going back to like the 80s, the magnet seems to be around 100, right? When the dollar gets undervalued, it bounces back to 100. When it gets above 100, it pulls back to it. And we saw that actually play out over the past couple of years, where the dollar went from like 90 up to about 115, and then had a really sharp kind of pullback over the past couple of months, and we're back really close to 100. So I don't know if you guys have any views on this, or any opinions, but I know some people look at the dollar index kind of trying to find correlation for Bitcoin. I don't really use it that way, but yeah, it's interesting to think about how gold and the dollar are either correlated or uncorrelated.
Yeah, absolutely. And I think if you have a strong viewpoint on the dollar, then I think that would inform, at least in the next few months, what your viewpoint would look like for the metals, gold and silver. Yeah, I don't have particularly a strong opinion. It does seem like, the Japanese central bank and the ECB are still very much in hiking mode, or in accommodative mode, or I'm sorry, tightening mode, while the US is definitely closer to to accommodative mode. Sorry, I keep getting those confused. They're closer. It's a lot of people still believe the Fed's going to remain very obstinate and hike through at least the next 2-3 meetings. I don't think they will personally. I think they'll do one more hike in the January meeting that we have at the end of the month. And I think they'll be done. That's my opinion. So I think because of that opinion, I do think the dollar, I would say my viewpoint on it is relatively neutral to slightly bearish from the current levels. And I do think some gold and silver exposure could make sense. So that's kind of my current viewpoint, but as an equities guy, I'm not like beating the drum, because I'm not typically so active in that asset class. So
Awesome.
I might be the wrong person to be asking here.
No, I think it's good to look at this from all sides, right? Nick, any thoughts on the bull bear scenarios? Optimistic, pessimistic? How are you playing this?
Well, I cannot shake my opinion. I've looked at everything 10 times over, and I still am in this choppy, like the market is going to be just choppy. Like I'm not bull or bear. I'm still continuing to feel like the market, maybe we see a little bit more downside and we break, the lows. But I don't foresee the huge sell-off that people are predicting in stocks. Um, I think that I'm continuing to kind of stay in that lukewarm. We're going to see the market chop around while we wait to see what the Fed is doing. Because really, this all relies on the Fed, right? This all relies on if they're going to slow sooner than later, how high are they going to go, and all of that. And we just don't know.
Can I
I
just
agree with
say, by
Trav.
the
I don't
way,
think things are.
oh, sorry, I cut
Yeah.
you off enough. Sorry.
No, go ahead. Go ahead.
Oh,
Say it.
well, what's interesting, in the short run, I think, back me up on this if you also agree. If you look at the charts, like it doesn't look great. Like it really doesn't. Like you look at some of the generals are faltering, like Tesla hitting fresh lows, in the past week, Apple at fresh lows, Amazon at fresh lows in the past week or so, or at least near the lows. The NASDAQ is not that far off the low that it's put in over the past, year or two. It's really just hovering just above it, that low that it put in back in the fall timeframe. And so from a technical perspective, it doesn't look great, in the short run.
It
Like
doesn't.
it definitely looks like this market could go lower, and could, take out the lows that it recently made. Again, you're losing some of the leadership from the tech generals. You've got the NASDAQ particularly looking quite weak and near lows already. So I think short run, I can see why people would be bearish and defensive still. And you do have this Fed meeting looming in January. There's a lot less visibility into what the Fed is going to do beyond January than there was, say, like 2 or 3 months ago, when the Fed was like, we're doing hikes in the next 2, 3, 4 meetings, whatever it takes. There's a lot less certainty there. So like I can see why people would be bearish in the very, very short term, talking 1 to 2 months, because technicals don't look great. a lot of the big leaders don't look great, and we just don't have a lot of visibility into what the Fed's going to do here. So I can understand the position, but again, I think like for me, I'm trying to look out a little further into the year and think about if we do make fresh lows, is it going to be the end of the world, or do we have an opportunity for buying in those periods when everybody's just like, it's the next 2009, you know?
Well, I can see us breaking lows, but it doesn't last long. Kind of like a fake out breakdown. Like what I can see happening is we break the lows, because you're right, the NASDAQ looks like crap. And we break the lows, everybody freaking piles in short, they pile in bear, and then the market, sells off a little bit, and then we can see it just chop in reverse maybe from there and take
Mm-hmm.
people out. So that's kind of what I can see happening.
Mm-hmm.
Since everybody is so bare, we break the lows. Yeah, everyone's like, yeah, we win. And then the market, just takes them out and runs their stops and fakes them out. Like I can see
Mm-hmm.
that happening. That's why I say, like, I can't get super, super bearish. Like people think we're going to see 30% from here downside plus. And I just don't know if I'm there, but yeah, that's where I'm at with it, and that's what I see as a likely scenario happening.
That would actually, tying that into Bitcoin, if that happened, that would actually be my ideal situation. Like right now, you can see like here on the weekly chart on Bitcoin, we've just been kind of following the NASDAQ with this downward trending channel. And what would be really ideal is if we got like a massive washout where we were down, say, sub 10K really quickly, which would be, I think, a great buy opportunity. And then if it trapped, to your point, Nick, like that would just be incredible. And then like think about what that would look like on like the yearly candle, right? Like that would just be a really strong wick, maybe to close the year green. I don't know. We'll have to see how it plays out. Obviously, it's hard to predict that far into the future, but that I can see that roadmap pretty well.
Well, if we end up following what happened in the 2008 bear market, then if we're comparing what's happening right now, a lot of people have overlaid that price action. It's very similar price action in the S&P 500, right? So a lot of people are saying, "Oh, well, this is what happened in the 2008 financial crisis. We definitely have more downside, price actions following, yada yada yada. We're not there yet, right? We're not to the bottom yet." But I just don't know if I think that this is a different environment. I think there are a lot of things that are so different now versus the 2008 financial crisis that I'm having a hard time just overlaying price action and saying we're going into a recession and this is what's going to happen, and we still have all this downside because this is going to follow the 2008 price action. So that's kind of what I've been thinking is how different this is, and looking for how it could not follow that same playbook, basically.
Mm-hmm.
Yep. Well said. Well, I think we've looked at the bull and the bear case. You guys want to jump into some listener questions?
Let's do it.
All right. So first question is from Speculator. Who has been your trading role model? Mine is personally Travis Devitt. He
No.
is the wisest trader.
Mine's Chris
I
Dunn.
don't.
How weird.
Oh man, I don't know. Do you guys have a role model in mind, or somebody that's been influential in your strategies, or?
That's a great
Honestly,
question.
Chris Dunn
That
has
is a good.
been influential in my strategies.
I did make Nikki look at charts like all day, every day for at least a year. That was 10 years ago.
You didn't make me, but yes, you
True.
you you definitely had a big part in my trading adventures.
Yes. I think for me, it's not any one person individual in particular. I've learned from a lot of people over the years, and going back to like the early 2000s, there were some former floor traders that turned like electronic traders in the early 2000s that I first learned from. And then throughout like the 2008 financial crisis, there were specifically like algorithmic traders and people that went from discretionary to more automated. Honestly, it's more the mental side, because strategies come and go. So, even old books like Jesse Livermore's, what is it, Reminiscence of a Stock Operator, stuff like that, to, learning the strengths and weaknesses of guys like Warren Buffett. Like, I don't put Buffett on a pedestal. I mean, he's smart and he's done really well for himself, but I also look at, what are his weak points. So I don't put anybody on a pedestal as like, this is the greatest trader of all time. Because people may be strong and have a really good run in a specific market with a specific strategy during a specific time period. And then that might be the end of their career. Right. And I've seen people kind of come and go that way. I don't know. What about you, Trav?
I agree with you, Chris, on the mental
Oh,
side,
go ahead.
how that's been more influential for me is reading like the book Trading in the Zone by Mark Douglas. Like that is what influenced my trading more so than following some trader or, whoever else is out there doing this. The That's definitely been better. Like Trading in the Zone, The Mental Game of Poker, those types of books and those authors had more of an impact on me and how I trade today than anything.
Yeah, for me, it's similar to what you said, Chris. I don't put Buffett on a pedestal, but I highly respect the game to the extent that he's just an amazing example of someone who kind of sticks to his core strategy and core principles, even when it looks like it might not be working. And then you realize through all the cycles, like he just sort of like, steadily compounds. Like you look at, a chart of Kathy Wood from 2019 through 2020, and everybody's shitting on Buffett and saying he's done, and like, holding up people like her and saying like they're the new investing geniuses, and Warren Buffett's lost his touch. Chamath in his SPACs, he was calling himself the new Warren Buffett. I think there's that indicator that anytime someone gets put on a magazine with the question, the next Warren Buffett, within like 3 or 4 years, that person has like a massive, fall from the heavens and ends up being completely, just totally discredited. It happened with like Bill Ackman when he got too cocky. It happened with Chamath. It happened with other people as well.
I mean, look at SBF. I mean, they were calling him the next Buffett. And
that's right.
I mean, that was probably the fastest reversal ever.
Yeah, exactly. So I do have to look at his track record over, a 50-year time frame, or maybe even more than 50 if you include his earliest days, and just look at how he's sort of stuck to like his strategies and not cared about underperforming for certain periods. Him and Munger have talked about going through multiple periods of significant drawdowns or significant underperformance, and they just keep at it and they keep doing the work. And ultimately, like, the results just always end up ahead of everyone else for the most part. So it's something like that that gives me, especially in these bear markets, that inspiration to just keep digging, keep working, just like keep the faith that like you put in the work and it's going to come out on the other side. And so,
Amen.
yeah, I
Stay
really,
in the game.
That's right.
Well said. Yep.
That's right.
Awesome. All right. Question. I think this one's probably for Travis. Is it wise to hold an inverse short ETF into 2023? What indicator should someone look at to start taking on more risk?
Yeah. So we always say that inverse ETFs should only be held for short-term trades. They are terrible vehicles for holding longer term because they suffer from volatility decay. And, I can point you to some resources on that, but essentially because these things rebalance every day or every week, they suffer from a decay due to volatility. When you have volatile swings, it's just like how there's asymmetric gains versus losses. If you lose 50% on an investment, you have to actually go up 100% just to get to break even. So these levered ETFs and especially these 2x, 3x ETFs, inverse ETFs, all suffer from this volatility decay problem. You can even Google it. There's some good articles out there now. So I always say that those are really only good for short-term trades, less than a week, less than 2 weeks. You don't really want to hold them because most of them tend to not only lose value over time, but they will almost certainly underperform whatever benchmark assets they're actually inverse of. So yeah, just keep that in mind. And as far as the other part of the question, I think, what was the last half of that question again?
Let
I think
me get it up here. I
Think
think I lost the
I
question.
think that
it.
I
Oh,
think
there it
that
is.
covered it.
What indicators should we be looking for to take on more risk? There we go.
Oh, yeah. No, it's a great question. Yeah. So, I think there are probably a lot of I used to have this sheet that I kept for easy access. It was like indicators of a market bottom, and I'll have to go back and dig that up for our next show, and we'll talk about it. But for me, it's of course fundamentals like valuation, like where are we at relative to historical valuations. Some stocks are already trading at really ridiculous, very, very low historical valuations. So I would look at things like that. I'm of course going to look at just a lot of the concerns in the market, things like inflation, interest rates, the trajectory, the trends of those things that the market is concerned about. And those would probably be the ones that I'm watching. I think like for me, I'd probably be willing to go, a little bit more net long, meaning either reduce hedges or add significant more long exposure. If if I do see a situation where we're not seeing, credit get worse, we're not seeing like any blow up, so to speak, in financial conditions, and we're not seeing like any black swans playing out in the markets, while also like sentiment is just weak. And if prices and sentiment remain weak and valuations are solid and getting to cheaper levels, while at the same time like the economy is not getting worse and there's not like really credit events happening, then I'd start getting more bullish for sure. And yeah, I'm sure there's some other things that we could probably look at indicator wise. I'll have to think about that a little more.
Awesome. All right. Next question from Crypto DOS. In crypto, many good projects fail because of Bitcoin market cycles. Do you think Bitcoin monopoly this entire crypto? I think I understand the question there. So I don't actually agree that good projects fail because of Bitcoin price market cycles. I think if a project is quality, it's going to survive market cycles and thrive in spite of lower prices. What typically happens is lower quality or higher risk projects that get either over levered or underfunded or whatever. I mean, insert whatever shitcoin has imploded over the past year or so. Projects that have just inherent risk that implode when prices go down, those are not quality projects, right? That's why we've seen so many things go to zero, is because, yeah, they work when prices go up. It's Ponzi-nomics in a way. But that's also why projects like Ethereum, I think, have survived multiple market cycles. I'm not an ETH maxi or an ETH pumper, but you can clearly see the projects that do survive over multiple market cycles, and over leveraged DeFi bullshit implodes. So that's what I'm looking for, right? Is what are the projects that can succeed in spite of crashing prices, right? Anything else you guys want to add to that?
No,
Yeah,
I
well
mean,
said.
yeah, very well said.
Next question. Your detailed plan for the coming 2 years is predicted by your analysis, not just buying when it's low, also who is managing your futures positions. I don't think I have a 2-year prediction and like detailed plan. I mean, we're nimble, right? This is what trading and investing is about, is like looking at current market conditions, looking at what's happening, analyzing it in real time, and making adjustments on the fly, right? I don't think I know a trader or an investor on the planet that goes, here's my detailed analysis for 2 years into the future, and here's exactly what I'm going to do, because there's just so many unknowns and variables that change on a dime. What do you guys want to add to that?
I mean, you nailed that one too. Yeah, I mean that's how this works, right? We're constantly taking in and reanalyzing abilities and probabilities. So it is very difficult. I mean, you can have a longer term bullish or bearish idea, but generally speaking, we definitely have to take things as it comes, because so much can change on a dime.
Like I know I've talked about probably removing most of my hedges if the S&P were to get to a certain price level, say around 3K or slightly below that. I'd probably be starting to run off my hedges. And so I know things like that don't exactly have a very specific time frame attached to them, but it's, that is mentally for me something that probably I'm looking for in the next 12 to 18 months type of time frame. And that would be like a potential plan or a potential probability that we're planning for. And so maybe that would be an example. So for us, for sure, like I'm relatively, my net exposure is relatively low. My gross exposure has grown some, but I would definitely take my net and my gross exposure up if we did see the market correct down to deep levels, and the hedges essentially did their job, and then I could remove them. So that's something, that's kind of how I think about it, is more in terms of, price levels and scenarios and economic scenarios. At least that's the way it is
That's
for
smart.
me. Yeah.
Yeah. Well said. All right. Andre was asking how to handle crypto taxes, how to differentiate Bitcoin long-term and short-term gains on one account, and how to make use of lost value of crypto assets at the end of the year. This sounds like a Nikki question.
Actually just put out a video on my YouTube about dealing with the lost value of crypto assets at the end of the year. So I suggest checking out my YouTube for that. As far as cryptocurrency taxes go, if you're using the same account, that makes things easier. And determining long-term versus short-term is basically just your holding time. So 1 year or under, it's going to be short-term capital gains. 1 year plus a day on, that's going to be long-term capital gains. So really, how you determine if you're doing short or long will depend on which method you choose in terms of first in, first out, last in, first out, specific identification method, all these boring words. But tax software, crypto tax software is really the best way we know how right now to deal with crypto taxes, unless you aren't making a lot of transactions. If you're only doing a few transactions a year, you can easily track that manually in a spreadsheet, and you'd have more control over it and you'd know it's correct. But I would say that other than that, if you're doing a lot of transactions and you don't want to manually track this in a spreadsheet, you need to use some type of crypto tax software like Token Tax. Um, so there are many of them now. Chris, do you have any preferred ones that you like? I know there's Token Tax. There's
Yeah, there's a handful of them. I would say just
I can't
do
remember
a
the
quick
other.
search. Yeah,
Yeah,
just do a search for ones and look at the offerings. I mean, there's several good ones out there right now, and yeah, I agree. I mean, just using software to automate that is your best bet. It can get really, really complicated quickly if you're doing DeFi, and especially if you're day trading and you have multiple exchanges, it can get
yeah.
out of hand quickly. So try to stay ahead of it as best you can.
And real quick on the loss of value of crypto, a lot of people are dealing with this right now with the FTX and all the other things that are going down in crypto. Really, until like for the FTX specifically, until you know how much money you're going to get back, you're kind of stuck. If you're going to get anything back, you can't really claim the loss right now until you know after the bankruptcy proceedings what you're going to get, if anything. But yeah, that's basically what everyone has to kind of wait around and see. All these companies that are in bankruptcy and your coins are locked up and held up in the proceedings. Unfortunately, you just kind of have to wait that out before you can
Yep.
claim the loss.
Yep, absolutely. All right. Joe was asking any advice for the AI hype train that's going to come? Are there any startups or investment vehicles that are coming up? Could crypto be used for universal basic income and wealth distribution, government governance when we all lose our jobs? Yeah, I mean, this is kind of the big question and the big story, I would say, of the month or the quarter, or possibly even the year this year, is the whole AI thing. I'm still in just discovery mode. I think, like a lot of people, there's going to be massive, massive disruption because of AI. And I'm wanting to participate in the most meaningful way possible. But as of right now, I'm still learning. I mean, I wasn't in the AI game in a meaningful way prior to last quarter when ChatGPT and Midjourney and all these things started to become public. So I'm kind of on a level playing field with a lot of you guys. But I'm spending quite a bit of time really thinking about it and looking at it and playing with the platforms and seeing what business opportunities I think are going to come out of it. And yeah, I don't know. I don't have any strong opinions yet, but I know big changes are coming. What do you guys think?
You know, today the news was out, ChatGPT, or actually the company behind it, I think OpenAI, being valued at something like 29 billion. It's just sort of insane. Sounds like a valuation already getting ahead of itself. But, you know, the amount of action happening and products being already toyed with and put out there is pretty wild. So like, I think I'm trying to look at opportunities as they come on the angel investing side. Definitely, if you have something that you're working on in the field, like I'd be interested to take a look. But we are just on the front end, maybe the second or third inning of what I think is going to be a pretty big wave. And that is a consensus viewpoint, by the way. Everybody thinks that we're at the front end of a wave, but it seems almost undeniable given the progress that's being made like daily and weekly on some of these models and on some of these products. So like, I'm super, super jazzed about it. It's not easy to play from a pure play sense in terms of investing in public markets, because we just don't have that many mature companies whose pure focus is on, you know, AI or AI enabled businesses. There's a handful, but otherwise you got to go get exposure via like NVIDIA or something, which has its own issues right now. So it's really the angel side where I'm going to be looking at things and thinking about how I can introduce AI into my own workflows. I think that is going to be a big area, like where even if you don't invest in it, you should be thinking and toying. Go play around with some of these products, whether it's, you know, Jasper or Descript or, you know, Runway, any of these products that you think might be able to fit into your workflows. Go figure out if they can make your work more efficient, because people who utilize those and who do that early are going to have an edge over those who don't. And I think that's going to be a huge skill set to be able to add to your toolkit here in the next couple of years.
Yeah, that's a great point, right? I mean, you've got the investment side, but what about your own personal productivity, right? Like that on your own businesses and your own workflow, like that alone is going to be a massive, massive potential upside. Yeah, awesome. All right. Do you think that ETH could lead the next crypto cycle? I don't think so. I mean, it typically hasn't. I mean, it can be kind of correlated with Bitcoin, but I don't know. You know, if there's a narrative that changes that view, I'll be the first one to kind of wave the flag. But I don't know. I just don't see it leading. Typically, the capital flow goes Bitcoin, then ETH and other majors, and then smaller alts. So that's kind of my opinion there.
Do you see any other trends? I know one of the questions we saw in that thread was about any other major trends that might lead the next crypto cycle. Are you seeing anything yet that you would classify in that category?
That's the $200 trillion question, right? I think there is going to be legitimate DeFi projects that do emerge and do really, really well. It's not going to happen overnight. The other thing that I'm still very optimistic on that has really not materialized in a big way yet is security tokens, right? STOs. This was a big thing, 2018. And I said, like, look, this is a very slow moving space. It's not going to happen overnight. But what that is basically the tokenization of private securities, real estate, startup stuff, right? Things like that, I think, are still coming down the pipeline, but it's not going to happen overnight. So that's something that I've been bullish on and optimistic on, but it's a slow burn, right? As far as like just the yield farming and all that stuff, I mean, we've seen the punishment that happens when people look for risk-free yield, right? And so am I optimistic on that? Not really. I think decentralized exchanges and things like that are going to hopefully take market share away from some of these centralized exchanges as people have lost faith in them, as they should. I don't trust any exchange. And, you know, I've gotten questions like, hey, Chris, what do you think of Binance? You know, there's a lot of talk here or there. Or what do you think of Coinbase? Or what do you think of Tether? Or what do you think of this? I'm like, I don't trust anything that has counterparty risk, right? Like, I just assume that there's shady shit happening, and there usually is. So if you're going to be in crypto, start with adversarial thinking and think that everybody's trying to steal from you, because they are. And yeah, go for it.
No, that's a really interesting trend to think about, because I've been thinking about that in recent weeks as well, where we have fewer and fewer on-ramps and centralized exchanges that people trust. And so what does that mean? What does that lead to? And I've been thinking, like, does that mean something like a Uniswap is going to start to really take off? Does it mean that there's some other, exchange that's going to pop up? Does it mean that, like, the stockbrokers like Fidelity take share? Does it mean that maybe GBTC won't trade at a 50% discount at some point? I think there will be implications. I haven't quite figured it out yet. I would hope and root for, like you said, some of these DeFi exchanges to play a bigger role. I think that would be really interesting to see crypto finally, like, live up to some of the promise of, like, decentralization, and STOs would be awesome too. Just not seeing a lot of activity there yet.
I think there's always going to be basically two playgrounds. There's going to be the CeFi playground, centralized finance, where you're going to have the centralized exchanges, you're going to have the Fidelities, you're going to have the fiat on ramps, and then you're going to have true DeFi, decentralized exchanges, things
DAOs,
like that.
DAOs maybe.
DAOs.
We heard a lot about DAOs
potentially
last year, and then it's been quiet lately.
Yep. Yeah.
So it's a choose your own adventure.
Yeah. And here's the problem, though, is with what I'm trying to look at is what regulations are coming down the pipe, and what is the regulatory fallout going to be from FTX? Because, again, it's just so bad. It's so bad. It gives regulators around the world to push their narrative of anti-crypto and pro CBDC. So I don't know. I'm taking that a day at a time.
Yeah.
All right. We talked about the dollar. So DXY, we went into quite a bit of stuff about that. Growth Value is also asking, I think we kind of answered this, but he said, after ICOs in 2016 and 17 and DeFi and NFTs in 2020 and 2021, what is the next big investment theme? That is the question, right? So we just kind of got done talking about that, but that's where my focus is going to be this year. Oh, nice. Yeah. So is gold breaking up to new all-time highs? We talked about gold quite a bit. I don't know. Do you guys think we see a new all-time high this year?
The chart sure does look like we will.
Yeah.
I mean, the chart
it's a slow mover,
looking
but
nice.
the cup and handle. Yeah, cup and handle pattern. Yeah.
And that alone could be enough, if it does break out, even if fundamentally maybe things aren't quite aligning. The breakout alone from a technical perspective could send it.
Yep.
Maybe it doesn't sustain a breakout for that long in that case, but it could definitely happen. Could be a trade.
Yep. Yeah. So we'll keep an eye on. I'm not buying at these levels. I've already got a position that I feel pretty good about, but yeah, keep an eye on it. Guys, we've been going for about an hour. I want to start to wrap it up. Any other things that you guys want to cover that you're looking forward to in 2023?
Honestly, I'm looking forward to getting back to my nerd ways, and I've been doing a lot of traveling since the middle of 2022, so I'm looking forward to kind of getting back into the books and the charts and finding opportunities. I think that this is a good time. And don't forget, it is retirement contribution season. And retirement contribution season is a good season when the markets are down. So that's something to keep in mind.
Yeah, I love this time of year because, you get re-energized. I always do my goal setting exercises. So I wrote down a bunch of goals over the past 2 weeks or so for 2023. And a big part of the goal set this year is definitely, just grinding harder, a little bit less of the travel, a little bit more of the staying focused, really setting up for this year and into the future. And then also was thinking about projections for 2023 as I was reading all, like, the Wall Street strategist boring stuff. I was like, okay, what might be some surprises for 2023? And I mentioned some of them already, like, maybe by mid-year things look more bullish than a lot of people believe. Maybe we'll get a Fed pause quicker. But I also think like there could be some really funky stuff in the M&A side. Like I'm expecting some really weird corporate transactions. Like I think this might be the year when Apple finally makes like a big splash acquisition. So I'm looking for stuff like that will be very exciting to watch as it plays out. And I think maybe we might even see another big fraud exposed, maybe even on the stock side. I think we could see that as well, because we have that whole thing where when the tide goes out, you see who's swimming naked, so to speak. And I think there's still more to come. There's still a lot of like really crappy businesses that went public in the last 2 years that are on their last legs that could end up in bankruptcy as well. So it's going to be a really, really fun year from a stock picker perspective, I think. So that's, again, why I'm like really trying to be dialed in for 2023. Excited to be here and to grow with We Talk Money and to grow with our community and to grow the Stock Geek brand.
Absolutely. And it feels like we're at like a really crucial level with Bitcoin, right? We talked about the price analysis earlier, and I think that the first month or quarter of this year is really going to set the tone for the rest of it. We're either going to get a washout with a V-bottom bounce, or we're going to get an accumulation range, or so those are like the bull cases, or just a slow, boring, continued grind to the downside, which I hope doesn't happen. But if that happens, we'll have to buckle up for it. So yeah, I know that the next couple of months are going to be really important months for not just price action, but also research on the AI side and just hunting for opportunities, man. Anytime we're coming off of a big down year, it's always good to reassess and prepare, because like we've said a million times, these are the seasons where you plant seeds that create life-changing wealth in the future. So.
And on that note, Trev, I did have one last question that I had for you. Do you think that this could be a good year for options trading?
Ooh, options trading. Maybe. I think the tough part with options trading is that, it's all about timing. You have to nail the direction and the timing. So if you think it's going to be a choppy year, like you said before, it could be tough for options still. If you think you can identify like a clear trend or a very clear trend reversal, then it could be a time for options. I think probably I would wait till it becomes a little bit more clear either what the trend is, or it's just the trend is so deeply, for instance, oversold or something like that. That's probably when I'd start to like really add some juice and leverage via options. I'm not convinced it's time for that yet, but we'll see.
Yeah, I was thinking with some of those stocks that we've seen just on deep declines, maybe 2023 could be a year where some options could be put in. But yeah,
I
that's
do
something
think,
I'm going to be looking at.
I think you could be right, especially as we approach maybe middle of the year, later in the year, on some of that really washed out stuff, like you said, where it's already just, everybody hates it. It's all just, left for dead. And, it's like buying Amazon when it's down 95% after the .com bust. If you can find stuff like that, maybe get some longer term leaps, give yourself a couple, 2 years and really give it that extra juice. I think that could be an interesting setup, but we just have to wait and see.
Yeah. Awesome.
Interesting. All right, guys. Well, thanks for the perspectives. Go to wetalkmoney.com, submit a question for the show. Also subscribe to the audio podcast and new YouTube channel, youtube.com/wetalkmoney. I wish everybody a prosperous 2023. Buckle up, man. We got some big things coming.
Yes.
All right. Well, we will see you guys next week. Take care. We'll talk
Happy
to you
New Year.
Happy New Year, everybody.
Cheers.